Hey guys, welcome to today's video. I will be discussing the 6 most common mistakes that real estate investors make that's costing them thousands of dollars in taxes. Now, in case you don't know who I am, my name is Nikki Burns, and I help six-figure multifamily buy and hold investors save $50,000 in taxes and maximize their cash flow so they can add more doors to their portfolio. Now, before we get into the juicy details, I want you guys to hit that like button and subscribe to my channel so we can help push this content out to others that are looking for help. Now, you guys ready to get into the juicy details of those common mistakes? All right, let's get started. Now, the first mistake I want to talk about is failing to track and document expenses properly. Now, real estate investing comes with a variety of different types of expenses, such as repairs and maintenance, property management fees, travel. Failing to track and document these expenses will lead to higher taxable income and missed tax deductions. Now, you want to keep your records organized by keeping your financial records in an accounting software that will help you track and organize all of your expenses into one place. Now, moving on to the second mistake, and that is not accounting for depreciation. Now, depreciation is the most common tax deduction for real estate investors. So depreciation is the allocation of a property's value over its useful life. And because depreciation is a non-cash expense, that will help you increase your cash flow. Now, moving on to the third mistake, and that is misclassifying expenses. Now, there are a variety of expenses that real estate investors incur, but the two most common expenses that I see real estate investors incur are repairs and maintenance and capital expenditures. With repairs and maintenance, those are deducted in the year that they have incurred versus capital expenditures that have to be amortized over a specific period. Now, what's the difference? Now, you may be wondering, okay, what's the difference between the repairs and a capital improvement? Now, repairs are improvements that keep your property in operating condition. As on the other hand, capital improvements adds more value to your property and it improves the property in a condition beyond its normal operating condition. And misclassifying these expenses can lead to incorrect tax deductions and audits. Now, moving on to the fourth mistake I see investors make, and that is failing to utilize the 1031 exchange. Now, the 1031 exchange allows you to defer your capital gains on your investment property when you sell it, as long as you reinvest the gains into another like-kind property within a certain period of time. Taking advantage of the 1031 exchange will allow you to continue to increase your profit and grow your portfolio. Moving on to the fifth mistake that I see, neglecting to incorporate. Most real estate investors are operating as a sole proprietor, which can result in higher self-employment tax and less personal limited liability protection in case you were to get sued. Now, if you were to get sued and you're operating as a sole proprietorship, then your personal assets will be at risk. And forming an LLC or corporation will potentially reduce your tax burden and protect your personal assets from lawsuits and creditors. Moving on to the sixth and final tax mistake that I see, failing to consult with the tax strategist. There are many complexities with real estate investing, and the tax law is continuously changing. Failing to seek professional advice from a tax strategist that specializes in real estate investing can be costly to your bottom line. A tax strategist can help you navigate through the tax code and the different tax law changes that will help you pay the least in taxes and maximize your cash flow so you keep more money in your pocket and less out of Uncle Sam. Avoiding these tax mistakes can save you thousands in taxes and increase your cash flow. And if you're interested in learning more about navigating through the tax code to pay the least in taxes and maximize your cash flow, then click that link below this video to book a call with me, and I will see you guys on the next video.